to invest today. Here's exactly how I will allocate that money, not just to grow it, but to preserve it, to generate consistent income, and ensure long term sustainability. My name is Fenwick. Welcome to part of my series. This is part of my How I Will Invest series, where I have broken down how to invest from 10,000 Kenyan shillings up to 10 million Kenyan shillings across regulated and practical investment opportunities in Kenya. In this video, where we're investing 10 million, I will share a diversified portfolio that includes real estate, treasury bonds, SACCOs, money market funds, NSE stocks, special funds, and 1% allocation to personal development, growth, and skills. But why skills? Because when you reach this level of investing 10 million Kenyan shillings, the goal is no longer just about to make money. You want to preserve capital, you want to scale, you want to multiply through knowledge, through structure, and through discipline. So we start this investment journey by having an investment framework. What is our guideline? And so at 10 million and above investment, your investment decision must serve four main goals. The first goal is capital preservation, and you have to preserve and protect your capital from erosion and risk. Number two, income growth. You have to generate stable, predictable, and consistent cash flow. Number three, growth. You have to invest in assets that appreciate in value over a certain period of time. The fourth one, legacy preservation. You want to build legacy, you want to build systems and skills that will sustain the wealth that you have created over a long period of time. Now, with that in mind, with those four investment framework in mind, here's exactly how I would invest 10 million Kenyan shillings today. The first allocation, I will change and start with real estate or property. And in real estate, I will invest 30%. 30% of 10 million is 3 million Kenyan shillings. And I'll begin by investing this money in real estate. At this level, what am I looking at? I want a mixture of capital appreciation and passive income. What does this mean? This could imply any of the following three avenues. Buying prime land in emerging areas, and this could be Kitengela, Eldoret, Nanyuki, Nakuru, Nairobi, in some particular places. Or investing in rental units or Airbnb apartments for steady cash flow, or diversifying via real estate investment trusts on the NSE, specifically for liquidity. Now, why real estate? Because real estate secures your wealth in tangible assets and serves as a powerful inflation hedge. When you invest in real estate, you are hedging your money, you are protecting your money against inflation. So, this is where I will allocate 30%, which is 3 million. Now, from research and from the previous returns, real estate have been paying between 9% to 12% annual return rate on your investment. So I went with an 8% return, and an 8% return of 3 million invested in real estate will give us 240,000 Kenyan shillings per annum. We shall use that money at some later stage. Let's continue. I will allocate 25% of 10 million, which is equivalent to 202,500,000, and I'll invest this money specifically in Treasury bonds. Why? Bonds are ideal for consistent income and capital protection stroke preservation. Remember, we mentioned when we started that at 10 million, you are looking at capital preservation and capital protection. And this is where bonds are best suited for. Now, what would I go for? I would go for infrastructure bonds. Why? Number one, they are tax-free. Number two, they have got high yielding of around 14, 15, 16, or 17% per annum, and paying interest after every 6 months. Another reason that bonds are backed by the government of Kenya and are available directly through the Central Bank of Kenya. Why bonds? Why bonds again? Because bonds create a predictable income to balance the market volatility in other areas. When you're buying bonds, you buy them at a predetermined price. So when you are buying bonds at 10%, 11%, 12%, that interest rate is locked and you'll get paid at that particular interest. So this gives you a predictable income and in a predictable span of time. So we have got the yielding margin of 14 to 17%, but for my calculations, I went with 12%. So that if you invest 2,500,000 at 12% in bonds, this will give you a return of 300,000 Kenyan shillings per annum. And yes, we are doing this. I have an illustration to show you how we are investing. So we have done 30% in real estate. We have done 25% in bonds. So real estate, 30%, 25% in bonds. So let's go to our next investment vehicle, which is the SACCO. And in the SACCOs, we are doing 15%. Why are we first? Why SACCOs? Because SACCOs remains one of the Kenya's most consistent wealth building vehicles, and they have been offering a steady between 8 to 12% returns or dividends annually. Plus, when you invest in SACCOs, you access affordable credit facilities for businesses or real estate expansion whenever you want to do a project. 15% of 10 million is 1,500,000 or 1.5 million. When investing in SACCOs, make sure that the SACCOs are regulated by SASRA, the arm of the government that is entitled to regulate SACCOs. What am I focusing on? I will focus on SACCOs with, number one, strong governance and market track record. Number two, transparent audits. And number three, reliable liquidity policies. This investment of 1.5 million will give me both passive income and leverage for future opportunities. And by this, I mean anytime I want to do a project, anytime I want to develop, or I have a project that is way beyond my capability, I can always leverage my investment in a SACCO and use it to get a credit facility to do a project. SACCOs have been paying between 8 and 12% returns. So my 1.5 million investment at 10%, I've gone with the bare minimum at 10% return, will give me 150,000 shillings per annum. So this is our SACCO investment. This is our SACCO investment. This portion, our 15%. Let's go now to this portion, which is the money market fund, the blue Legos money market fund. And I will allocate 10% to money market funds. Why money market funds? I've always said that money market funds, we invest in money market fund because of liquidity, and which is the ability for us to get money whenever need arises. So anytime you want cash, so money market will offer you a liquidity buffer. This is cash that is working for you, earning interest, but easily accessible for emergencies or for business opportunities whenever they arise. Top money market funds in the last 2-3 years have been paying between 9 to 11% returns. In 2025, top paying money market funds are averaging between 9 and 11% in returns. You have to make sure that you research and go with money market funds that are regulated by Capital Markets Authority. And so at 10%, an investment of 1 million, remember I said we are allocating 10% in money market funds. So if I allocate 1 million and they pay me dividends at 10% at the end of the year, that will be 100,000 Kenyan shillings per annum. So the blue Legos are our money market funds, and they have given us 100,000 per annum. So let's go to Nairobi Securities Exchange, which is 8%. This is yellow, our yellow Legos. I would invest 8% in NSE. And when investing in NSE, as I've said in my previous videos under this series, I would specifically be inclined to blue chip dividend stocks. These are companies that have been proven over time to be giving a consistent payout. We're talking about Safaricom, Equity Group, KCB, EABL. Similarly, as I've always said, when investing in these companies, you can also diversify into ETFs. You can diversify into rates for broader exposure with less volatility in the market. The goal of investing in the Nairobi Securities Exchange is to have long-term growth and ownership in companies that are most profitable, like Safaricom and like the banking industry. It's worth mentioning that when investing in Nairobi Securities Exchange, always reinvest your dividends for compounding or use them to balance your cash flow at the end of the financial year. At 10%, blue chip companies pay between 11 to 12% returns per annum. But I went with the minimum of 10%. Now, because I invested 800,000 in the NSE at 10%, my yield will be 80,000 Kenyan shillings per annum. So this one is our stock market, investing in the NSE. Finally, I will invest 11% of my 10 million, which is 1,100,000 Kenyan shillings, and I'll invest this in the special funds. This is my green allocation, the special funds. Why? Because special funds, they have got high risk, but they've got high returns. And where does this money go? This money goes to private credit funds. This money goes to fixed income hybrids or structured yield products that are specifically licensed fund managers. I've mentioned examples previously. I'll attach a video here on how to invest in special funds. The margins or the payout for special funds are typically between 12 and 15% plus annual returns. Though, as I mentioned earlier, they come with slightly higher risk and longer lock-in periods. There's some who have lock-in period of 6 months, others 1 year. So research to find out on particular ones that you want to invest in. When investing in special fund, stick strictly to Capital Markets Authority approved firms. Read the fact sheet and review the past performance and understand the exit timelines before investing in any special fund. What special funds does that it diversifies your investment beyond the traditional market. We are used to bonds, bills, and money market funds. So special funds will diversify your investment beyond the traditional investment. And what this does is that it boosts your yield, it boosts your returns without exposing you to excessive volatility. I went with 10%. So with 10% on my 1.1 million investment, special funds are able to give me 110,000 shillings per annum. And then finally, guys, I've always insisted on this last guy here. This last guy, investing in yourself, personal investment, skills, and like can call it coaching. So finally, I will invest my 1%, which is around 100,000 Kenya shillings, into myself. Now, at this level of investing 10 million Kenyan shillings, the difference between a millionaire and a decamillionaire or a billionaire with a B, the difference is not information, but execution and mindset. And at this, what could this mean? This could mean enrolling or investing in an executive or leadership program, working with a wealth coach or a mentor, or building global skills like artificial intelligence, strategic investment, or business scaling if you have a business. It's important for you to understand that when your mindset expands, your investment also follows. And I have to mention this, that even 1% investment in yourself at this level can 10x your returns in the long run. So this is a summary portfolio of what we have invested in. And as we go through this, I will take you through this. We've said, I hope you're able to see it. We've said we'll do 30%, 3 million in real estate rates. Then we shall do 25% in Treasury Bonds. We shall do 15% in SACCO. We shall do 11% in special funds. We shall do 8% in stock exchange, Nairobi Stock Exchange. Then that's 8%. Then we shall do 1% in skills and personal development. At the end of the day, this is how your portfolio will look like. It is balanced between income, safety, growth, and ability to multiply your money, growth and discipline. Every shilling in this portfolio, every shilling has been assigned a purpose. Some shillings, some money is assigned for cash flow. Some has been assigned compounding, and some has been assigned your ability to make you the person that will be able to grow the 10 million to 15 million to 20 million to 100 million. That's why we are investing this 1% into yourself. Now, how do the annual returns look like? You're investing money, so at the end of the day, you'd want a return. So rates gave us 240,000. Bonds gave us 300,000 per annum. SACCOs gave us 150,000. Money market funds gave us 100,000. Stock NSE gave us 80,000. And special funds gave us 110,000. So the total returns from this portfolio will give us 980,000 per annum. And this, compared to the 10 million investment, this equates to 9.8 annual return on investment, which equates to around 81,000 Kenyan shillings per month. This portfolio, 81,000 shillings per month. As we come to conclusion, if I had 10 million, that's how I'll invest it across regulated firms or bodies, across high yielding and growth focused investment vehicles that will secure both the present income and the future wealth. The higher your capital, the greater your responsibility to protect it wisely. Diversification is your shield. That's why we've got a broad portfolio, diversification is your shield, but knowledge is your sword to maintain this amount. Because wealth is not just what you have, but it's who you've become in the process of building that particular wealth. So let your portfolio reflect a balance between stability and ambition, and between money and skills mastery. So this is how I would invest 10 million Kenyan shillings today. Until next time, I'll be seeing you in the other videos of this series, how I will invest a particular amount of money. Until next time, thank you for